Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets For You. In today's video, we'll be looking at the key economic events and data releases from May 19th to May 23rd, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets For You. I've set the dates from May 19th to May 23rd, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with USCB leading index, which typically has a modest impact on the dollar. Tuesday brings the Reserve Bank of Australia interest rate decision, where markets expect a 25 basis point cut to 3.85% from 4.1%. We'll also see Canadian inflation figures and Japanese trade balance data overnight. Wednesday features UK inflation data, which is expected to show a significant jump to 3.3% from 2.6%. Australian PMI figures will be released after hours, followed by Japanese machinery orders. Thursday is packed with PMI readings from the UK, US initial jobless claims, Canadian PPI figures, and US PMI data. The day concludes with Japanese inflation numbers overnight. Friday rounds off the week with UK retail sales, Canadian retail sales, and US new home sales. This week's key market-moving events will be the RBA interest rate decision on Tuesday, UK inflation data on Wednesday, and the various PMI readings on Thursday. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the euro against the US dollar and the British pound against the US dollar, as both instruments face significant data releases in the coming days. Let's start with the euro against the US dollar. Looking at the daily chart, the euro-dollar pair has pulled back from recent highs and is currently trading around 1.1166. The pair has been consolidating below key resistance levels over the past couple of weeks. Looking at important levels, the euro against the dollar has support at 1.1052 and 1.0912, while resistance can be found at 1.1278 and 1.1418. The price is currently testing the 20-day moving average, the red line, which has shifted from acting as dynamic support to potential resistance. The stochastic oscillator is moving higher from oversold territory, suggesting potential for a recovery in the short term. Thursday's US initial jobless claims and PMI data will be watched closely for signs of economic health, which could influence Fed policy expectations. Any weakness in these figures could push the pair toward the 1.1278 resistance, while stronger data might see it retest the 1.1052 support level. Now, let's turn to the British pound against the US dollar. On the daily chart, the pound-dollar pair is currently trading around 1.3277, having completed a period of consolidation after the recent bullish trend. The pair faces crucial UK inflation data on Wednesday and PMI figures on Thursday, both of which will be closely watched for signals about Bank of England policy. Looking at important levels, the pound against the dollar has support at 1.3161 and 1.3085, while resistance stands at 1.3371 and 1.3443. The price is currently trading near the 20-day moving average, the red line, which is providing dynamic support. The stochastic oscillator is showing upward momentum, suggesting potential for continued strength in the near term. With UK inflation expected to jump to 3.3% from 2.6%, this could reinforce the Bank of England's cautious stance on rate cuts and potentially drive the pound higher. Friday's retail sales data will also be important, as consumer spending remains a key component of UK economic health. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Wednesday's UK inflation release and Thursday's batch of global PMI data, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.